Welcome back, everyone, to the deep dive. Today, we're going to be looking at Nvidia. And we've got their most recent financial report here for the third quarter of fiscal year 2025, which ended on October 27, 2024.
Yeah, looking forward to this one.
Yeah, they're a fascinating company, always pushing the boundaries of technology. And they're known, of course, for their graphics cards. But as we're going to see, their business is much broader than just gaming these days.
That's right.
So in this deep dive, we're going to be uncovering some pretty interesting insights, like how data centers are driving NVIDIA's incredible growth and the challenges they're facing from those new export regulations we've all been hearing about. And, just for fun, we even found a surprising little detail about their employee stock benefits, so stay tuned for that.
I'm intrigued. It's remarkable how NVIDIA has really used their graphics expertise to kind of springboard into all sorts of new areas, scientific computing, AI, data science. These fields are really shaping the future, and NVIDIA is right there on the cutting edge, powering innovations in things like autonomous vehicles, robotics, even the development of the 3D internet.
It's amazing. So they've really expanded way beyond just making games look pretty. The business is essentially divided into two main segments, compute and networking and graphics. But, let's get to the heart of it, the numbers. NVIDIA pulled in a massive $35.1 billion in revenue for Q3 2025. That's a 94% increase year over year and a 17% jump from the previous quarter. So what's fueling this incredible growth?
Well, a significant portion of that growth can be attributed to the surge in data center revenue.
Yeah, I see that here. Data center revenue is up 112% year over year. Those are some serious numbers. So what's behind this massive demand?
Well, it's the age of AI, right? And NVIDIA's Hopper computing platform is playing a key role. This platform is specifically designed to handle the immense processing power that's required for training and running large language models and generative AI applications.
So it's not just gamers clamoring for the latest NVIDIA chips anymore.
Not at all. Cloud service providers make up a big chunk of that data center revenue. And they're joined by consumer internet companies and enterprises. Everyone wants a piece of the AI pie. And what's particularly interesting is the surge in demand for their H200 offering this quarter.
Yeah, I noticed that too. It's part of the Hopper architecture, but what makes it so special? Why is everyone suddenly so eager to get their hands on it?
Well, the H200 stands out for its exceptional performance and power efficiency, making it ideal for training and deploying large language models and generative AI. It's really become the workhorse of the AI world, capable of handling these complex tasks with incredible speed and accuracy, and the demand for the H200 really just underscores how rapidly the field of AI is advancing and the critical role that NVIDIA is playing in providing the necessary infrastructure.
Okay, so data centers are clearly a major growth engine for NVIDIA, but they do have other revenue streams as well, right? What about their gaming, professional, visualization, and automotive segments?
Yeah, you're right. While those segments haven't seen the same explosive growth as data centers, they all posted solid gains. Gaming is up 15% year over year, driven by their new GeForce RTX 40 series GPUs and their chips for game consoles. Professional visualization, which caters to design and engineering workstations, is up 17%, thanks to their new Ada architecture, which is designed for high-performance graphics and complex simulations. And their automotive segment, focusing on self-driving car technology, jumped a remarkable 72%, so you know. This diverse portfolio of products, with healthy growth across various segments, really showcases NVIDIA's strategic positioning in these key technology markets.
Yeah, it's impressive. But you did mention some challenges earlier, specifically those new export regulations. Those seem like they could be a potential roadblock for them.
Yeah, they definitely are. These U.S. export control regulations are specifically targeted at sales to certain regions, including China. Essentially, the U.S. government has imposed licensing requirements on some of NVIDIA's most powerful chips, like the A100 and H100, due to national security concerns.
So how is NVIDIA adapting to these regulations?
Well, they've had to be creative, developing China-specific products that comply with the regulations, while also working through the licensing process. For their higher performance chips, it's a complex and evolving situation that presents significant challenges for NVIDIA, and it could potentially impact their competitive position in those key markets.
So with such high demand for their products, can they even keep up? Supply chain issues have been a major headache for a lot of tech companies. What's NVIDIA doing to ensure that they can meet this demand?
It's a delicate balancing act, for sure. They're relying on third-party manufacturers with long lead times for production. But one interesting detail in the report highlights their proactive approach. NVIDIA has been aggressively securing future supply, even going as far as paying premiums. and placing deposits to guarantee capacity.
Wow, that sounds like an expensive strategy.
It is. And those costs inevitably factor into their product pricing. But it shows just how crucial it is for them to secure those components. In this fiercely competitive and constantly evolving market, they're clearly committed to meeting that surging demand for their products, even if it means incurring additional costs in the short term.
Speaking of interesting details, I found something buried deep in the report. In the Global Restricted Stock Unit Agreement section, it's about employee stock benefits.
Oh yeah, what's that?
Well, it outlines this unique provision that allows for accelerated vesting of unvested stock units in the unfortunate event of an employee's death, providing financial security for their beneficiaries.
It's pretty amazing.
It is. It's not something you typically find in a financial report, but it stood out to me. It really speaks to Nvidia's commitment to their employees and their families. It's a good reminder to look beyond the headlines and dig into the details. You never know what you might find.
Absolutely. Financial reports are not just numbers. They offer a glimpse into a company's culture and values.
Okay, so we've covered a lot of ground here, from explosive revenue growth to supply chain challenges, and even this heartwarming detail about employee benefits. Ready to delve deeper into the intricacies of Nvidia's financial landscape.
Always. Let's see what other insights we can glean from this report. Now let's talk about those inventory provisions. Preparing for potential excess inventory. It's a necessary precaution in a market that's as unpredictable as this one.
Yeah, they mentioned in the report that they set aside a significant amount, $865 million just in Q3. And for the first 9 months of fiscal year 2025, it jumps to $2.2 billion. That's a lot of money.
It is a considerable sum. It reflects the volatility of the tech market and the challenges of accurately forecasting demand. But the report also highlights how NVIDIA is actively managing this. They offset a portion of that provision by selling off previously reserved inventory and settling some excess purchase obligations. This resulted in a provision release of $106 million for the quarter and $305 million for the 9-month period.
So they're not just passively holding on to excess inventory, they're strategically managing it to mitigate potential losses.
Exactly. It speaks to their proactive approach to supply chain management, constantly adjusting to market dynamics.
Yeah, it's interesting. I came across something else in the report that kind of sheds light on the legal landscape NVIDIA operates in. It's about a securities class action lawsuit. That was filed back in 2018. That's still ongoing.
Oh, right. The lawsuit alleging those misleading statements about channel inventory and the impact of cryptocurrency mining on GPU demand. It's been a long and winding road for that case.
It has. It's gone through dismissals, appeals. It even reached the Supreme Court.
It really shows you the complexities and uncertainties of legal proceedings and the potential financial implications they can have for a company.
It's a good reminder that beyond the impressive financial figures, there are these external factors that can significantly impact a company's trajectory.
Definitely. And it's also a testament to the importance of transparent communication with investors, especially when navigating situations like this.
Speaking of transparency, the report provides a detailed breakdown of revenue by geographic region. Did you know that 58% of their total revenue in Q3 came from sales outside the United States?
Wow. That's a clear indicator of their global reach and their success in tapping into those international markets.
And within their specialized markets, data center reigns supreme, generating a whopping $30.7 billion for the quarter, more than all their other markets combined.
It really underscores that profound shift towards AI and accelerated computing, a trend that's only going to intensify in the years to come.
Absolutely. Beyond revenue, the report also delves into their cash flow. Their cash provided by operating activities increased significantly in the first 9 months of fiscal year 2025 compared to the previous year.
That's largely driven by their robust revenue growth, although it's partially offset by those advance payments on supply agreements.
Right, those upfront payments to secure those future components.
Exactly. It's about balancing immediate needs with those long-term strategic goals.
Makes sense. And while we're on the topic of balance, let's take a look at their debt situation. They have a diversified debt portfolio, with notes payable maturing at different times.
So spreading out repayment obligations over time.
It seems that way. The report details their aggregate debt maturities. Some are due in 1 to 5 years, others in 5 to 10, and some extend beyond 10 years.
It suggests a well-structured approach to managing their debt, ensuring they're not overwhelmed by any single maturity date.
It speaks to their financial prudence and that long-term planning. The report also mentions a $575 million commercial paper program. What exactly is that?
That's a short-term borrowing mechanism that companies often use to cover operational expenses or manage temporary cash flow gaps. It gives them flexibility.
Interesting. The report notes that they had no commercial paper outstanding as of the reporting date, but it's good to know they have that option if needed. Before we move on, I wanted to circle back to those employee stock benefits we discussed earlier.
The accelerated vesting provision in case of an employee's death.
Yeah. It's not a typical detail you'd find in a financial report, but it really speaks volumes about their corporate culture. Yeah. And their commitment to their employees.
The good point, often it's those less prominent details that reveal a company's true values and priorities.
All right. Ready for another layer of this deep dive? We're about to explore some of NVIDIA's accounting policies.
Sounds good. Let's see what we can uncover.
The report provides insights into how they handle stock-based compensation, which is a significant expense for a tech company like Nvidia.
Absolutely. Attracting and retaining top talent often involves, those generous stock-based incentives.
And the way they account for these expenses can have a considerable impact on their financial statements.
For sure.
The report breaks down how they calculate stock-based compensation expense, considering factors like the type of awards, vesting schedules, and the fair value of their stock.
That transparency is crucial for investors to accurately assess the company's profitability and understand the nuances of their financial reporting.
They even disclose the amount of unearned stock-based compensation expense, which stood at $12.4 billion as of the reporting date. This represents future expenses that will be recognized as those stock awards vest.
That's a substantial liability that investors need to consider when evaluating the company's overall financial health.
The report also sheds light on their calculation of net income per share, both basic and diluted.
Those are key metrics for assessing a company's earnings performance.
Absolutely. And they go a step further by providing a reconciliation of the denominator used in those calculations, which includes the weighted average number of shares outstanding, along with the dilutive impact of outstanding equity awards.
This level of detail ensures transparency and gives investors a clear understanding of how those per-share earnings figures are derived.
And just when you thought we'd reached the bottom of these financial statements, we encounter a section on derivative financial instruments.
It can seem daunting, but these instruments play a critical role in managing financial risks, especially for a global company like Nvidia.
The report explains how they use foreign currency forward contracts.
These contracts help mitigate the impact of exchange rate fluctuations on their operating expenses, essentially a hedging strategy, to protect them from potential losses due to currency volatility.
And they use similar contracts to manage risks associated with their foreign currency denominated assets and liabilities.
It shows they're not just focused on revenue growth, but also actively managing their financial exposures on a global scale.
They even disclose the notional value of their outstanding foreign currency contracts, $1.36 billion designated as cash flow hedges, and $728 million in non-designated hedges.
Again, it all comes back to transparency. This level of detail allows investors to clearly understand their hedging activities and how they might impact their financial performance.
Well, I think we've covered a lot of ground when it comes to the intricate details of NVIDIA's financials.
We have. We've explored their revenue streams, supply chain dynamics, legal battles, and even delved into their accounting practices and risk management strategies.
It's a lot to process.
It is. Sometimes it's helpful to pause and reflect before we jump into the next phase of our deep dive.
Okay, so we're back and ready to shift our focus to the future. What's next for NVIDIA? What can we expect to see from them in the coming months and years?
But predicting the future is always a tricky business.
Yeah, especially in the fast-paced world of tech.
Exactly. But there are some pretty strong indicators that point to continued success for NVIDIA.
I'm all ears. What makes you so optimistic?
Well, the trends that have fueled their growth, they show no signs of slowing down. The demand for AI is insatiable. Data centers are expanding at an exponential rate, and accelerated computing is becoming increasingly prevalent across industries.
So NVIDIA is in the right place at the right time?
It certainly seems so. They've positioned themselves as leaders in these key areas. But it's important to remember that no company is without its challenges.
True. We've already discussed those export control regulations and the supply chain complexities. What other obstacles do they face?
Well, competition is a major factor. Other players in the chip industry are vying for a slice of the AI and data center pie. Companies like Intel and AMD are investing heavily and their own AI and accelerated computing offerings.
So it's a race to the top with no guarantees.
Precisely. Nvidia will need to maintain its innovative edge, constantly pushing the boundaries of performance and efficiency to stay ahead of the curve.
And what are they doing to achieve this?
They're investing heavily in research and development, exploring new frontiers in chip design. They're even venturing into areas like quantum computing.
Quantum computing, that sounds like something straight out of a science fiction movie.
It might sound futuristic, but it's a field with immense potential. And Nvidia is making strategic investments to be a part of it. They understand that to remain a leader. They need to anticipate and adapt to the next wave of technological advancements.
So from an investor's perspective, what does all of this mean? Nvidia's stock has performed exceptionally well in recent years.
It has. And that performance is a reflection of their strong financial results and their leadership in these high-growth markets. But like any investment, there are risks to consider.
What are some of the key risks that investors should be aware of?
Those export control issues we discussed could have a significant impact on their profitability. Increased competition could put pressure on their margins. And unforeseen technological disruptions are always a possibility in this rapidly evolving industry.
So it's not a guaranteed win.
No investment ever is. But for those who believe in the long-term potential of AI, data centers, and accelerated computing, Nvidia remains an intriguing opportunity.
Well, we've taken a deep dive into the financial landscape of Nvidia. We've explored their impressive growth, their strategic challenges, and their ambitious plans for the future. What are your key takeaways from all of this?
Well, I think the main takeaway is that Nvidia is a company at the forefront of technological innovation. They successfully leverage their expertise in graphics processing to become key players in fields like AI data centers and autonomous vehicles. They've demonstrated a remarkable ability to adapt to changing market dynamics, and they're making bold investments to stay ahead of the curve.
So what's a final thought you'd like to leave our listeners with?
I'd encourage our listeners to consider the broader implications of Nvidia's dominance in these emerging technologies. How will their innovations shape the future of industries? What are the ethical considerations surrounding the increasing power of AI? These are questions worth pondering as we navigate this rapidly evolving technological landscape.
That's a great point. So much to think about. Well, we've certainly equipped you with the insights and perspectives you need to better understand Nvidia's position in the tech world. We hope this deep dive has sparked your curiosity and provided you with some valuable knowledge. Remember to stay curious, keep exploring, and join us next time for another deep dive into a new and fascinating subject.